Welcome to Benoat Capital's Market Navigator. As we enter spring, we're reflecting on a quarter that brought no shortage of headlines, from escalating geopolitical tensions to shifting economic signals that kept investors on their toes. I'm Michael Cochran, and over the next few minutes, we'll break down the major developments that shaped markets in the first quarter and walk through the key themes we're watching as we move further into 2026. The first quarter of 2026 has served as a timely reminder of just how important it is to be financially prepared. After strong performance in 2025, markets have faced a challenging combination of geopolitical disruption, elevated oil prices, and renewed economic uncertainty. The conflict in Iran, which broke out at the end of February, quickly became the defining market narrative, pushing oil prices sharply higher and triggering the year's first meaningful pullback. In moments like this, history offers valuable perspective. Looking back at how markets have performed during past geopolitical conflicts reminds us that stocks tend to be far more resilient than the immediate environment might suggest. A recent analysis we reviewed looked at 20 major military conflicts since World War II and found that the S&P 500 fell an average of 6% from the initial shock to trough and recovered in just 28 days, regardless of how long the conflict lasted. The notable exceptions where the military conflict intersected with broader economic stress included the Yom Kippur War, an Arab oil embargo in 1973, Iraq's invasion of Kuwait in 1990, and Russia's invasion of Ukraine in 2022. In each case, market losses were deeper and recovery slower, not simply because of the conflict itself, but because of the compounding effect of inflation, rising interest rates, and at times Federal Reserve policy missteps that amplified conditions. As we've discussed, today's environment echoes past periods of geopolitical stress, but the key distinction is that there is no meaningful evidence the long-term economic or earnings outlook have been impaired. Volatile energy prices are only one piece of a broader picture that, while it has cooled over the past year, remains fundamentally sound. The underlying economic foundation and the earnings power of corporate America are intact, and while no one can predict exactly how long this period of uncertainty will last, history suggests that once military objectives are achieved and energy flows normalize, attractive opportunities tend to emerge for patient long-term investors. Our confidence in the long-term attractiveness of equities has not wavered, and we believe the discipline of staying invested will be rewarded. The labor market tells a similar story of moderation without deterioration. Mixed payrolls data over the past several months show job seekers now outnumber job openings for the first time in years, a meaningful shift from 2022 when 2 openings existed for every unemployed worker. Context matters, though. Both supply and demand are softening simultaneously as lower immigration and an aging population reduce workforce entry, which has kept unemployment near historically strong levels. This matters because employment flows directly into household income, consumer confidence, and consumer spending, which accounts for more than 2/3 of GDP and has remained more resilient than many expected. Looking ahead, new questions are likely to emerge in the coming months, including a change in leadership at the Federal Reserve and the midterm elections later this year. Again, for long-term investors, the first quarter serves as a reminder that markets seldom move in a straight line, and that sound investing principles matter most precisely when uncertainty is at its highest. With tax season upon us, your return is either filed, extended, or buried somewhere you'd rather not think about, and we get it. Wherever it stands, sharing a copy with your advisor as we continue planning for the year would be helpful. You can upload it securely through our portal or drop it off at any of our offices. Related to that, if you've had any material change this year, a job transition, liquidity event, or anything in between, we'd love to discuss that with you so we can plan accordingly. Whether markets are smooth or stormy, our team is here with steady guidance and an open door, and we're always available for a conversation. In the meantime, be sure to follow us online or on social media for our latest blogs, videos, and updates.